Disclaimer: this video is for educational and entertainment purposes only and does not constitute financial advice. Cryptocurrency markets are volatile. Always do your own research and consult with a licensed advisor before investing. Is Trump's crypto empire triggering a historic Bitcoin supply crisis? Behind the scenes, whales are hoarding, OTC desks are drying up, and rumors swirl about a secret US Bitcoin reserve. Is this the beginning of a bull run or something far bigger? Chapter 1: The Invisible Crisis. Bitcoin has always been a story of extremes: massive price surges followed by gut-wrenching crashes, fierce believers versus skeptical regulators. But today, a new crisis is quietly reshaping the future of this digital asset. The over-the-counter Bitcoin market, the behind-the-scenes avenue where billion-dollar trades take place far from the public eye, is experiencing an alarming shortage. The numbers tell a dramatic tale. As of July 2025, the total balance of Bitcoin on OTC desks has dropped to just 156,600 Bitcoin. That's not just a dip, it's a record-breaking low not seen in over 10 years. Back in 2021, OTC desks held more than 550,000 Bitcoin. That means we've witnessed a staggering 72% plunge in supply over just 4 years. These OTC desks, often used by institutional giants and ultra-wealthy investors, are now being drained dry. Why? Because the big players are no longer just trading, they're hoarding. To understand why this matters, you have to grasp what OTC desks really do. When a hedge fund or billionaire wants to buy tens of millions of dollars worth of Bitcoin, they don't just click buy on Coinbase. Doing so would send shockwaves through the market and trigger massive price spikes. Instead, they go to OTC desks to execute large trades quietly and efficiently. These desks serve as a buffer, keeping large-scale trading activity from rattling the public markets. But now, that buffer is evaporating. Chapter 2: Repeating History. History offers some context. In the 2019 to 2021 period, the OTC supply gradually dried up, even as few noticed. What followed was one of the biggest bull runs in Bitcoin history, with prices skyrocketing from around $7,000 to over $60,000. A similar pattern is repeating today. From 2023 to mid-2025, OTC supply has been plunging again. And once more, Bitcoin is on the rise, currently hovering above $60,000. The signs are there, echoing the past with eerie accuracy. What makes this trend especially interesting is not just the dropping OTC supply, but what happens to that Bitcoin afterward. According to data from CryptoQuant, miner outflows, Bitcoin moving from miners to OTC desks, are also drying up. Meanwhile, a growing portion of existing Bitcoin is being moved into deep cold storage. That's a technical term meaning the Bitcoin is placed into offline wallets that are not connected to the internet. In simple terms, once the Bitcoin goes in, it's not coming back out, at least not anytime soon. This behavior signals high conviction. These buyers aren't in it for quick gains. They're betting on something bigger down the line. Behind this trend is a growing tidal wave of institutional demand. But this demand isn't showing up on public exchanges like Binance or Coinbase. Instead, institutions are accumulating in stealth mode, using OTC desks to avoid slippage. Slippage occurs when big buy orders cause prices to spike mid-trade. To avoid tipping their hand and sparking panic or greed among retail traders, the smart money prefers to work in the shadows. At the same time, spot exchange flows, where average users buy and sell Bitcoin, remain flat or even in decline. So, while whales are buying in bulk behind the curtain, everyday traders are none the wiser. It creates a two-tiered market, one public and stagnant, the other private and hungry. And it's the private one that's draining the liquidity pool dry. That's the crux of the issue: liquidity. Liquidity refers to how easily assets can be bought or sold without affecting the price. In Bitcoin's case, liquidity is vanishing. When both OTC desks and public exchanges see falling supply, we're entering what analysts call a supply shock. This is not just some economic jargon. A supply shock means demand is outpacing supply to such a degree that the price must rise sharply to rebalance the equation. We saw it in early 2021. We could be on the brink again. And into this high-stakes moment walks none other than Donald Trump. Chapter 3: Trump's Crypto Transformation. Once one of Bitcoin's loudest critics, Trump is now positioning himself as the crypto president of 2025. It's a sharp U-turn from his stance during his first term in office. Back in 2019, Trump warned that Bitcoin was based on thin air and posed a risk to national security by enabling illegal activities. He wasn't wrong to point out crypto's growing pains, but he was far from embracing it. Fast forward to today, and Trump is no longer just tolerating crypto, he's profiting from it, lavishly. But this transformation in OTC wasn't announced by Trump himself. It came straight from his son, Eric Trump. In a recent media appearance, Eric didn't mince words. According to him, demand at OTC desks has skyrocketed to the point that even they are struggling to fill orders. That's significant. Eric's comments didn't stop there. He mentioned that even small fractions of Bitcoin, such as 0.1 Bitcoin, could soon become highly valuable. That's a loaded statement. In today's market, 0.1 Bitcoin might cost a few $1,000s. But the underlying message is more powerful. We may be on the verge of a price surge so dramatic that owning even a sliver of Bitcoin could become a luxury. This leads us to the most fascinating theory yet, the possible creation of a US sovereign wealth fund with Bitcoin at its heart. These funds, typically run by countries like Norway or Saudi Arabia, serve as financial fortresses, long-term investment vehicles meant to secure national wealth. What if America is planning something similar, but tailored to the digital age? If that's the case, it wouldn't just be a historic pivot in US financial strategy, it would redefine America's role in the coming era of digital currencies. Eric Trump's remarks, far from being random or speculative, may be early signals of a dramatic new economic policy brewing beneath the surface. The idea sounds bold, but it's not without backing. Tom Lee, a respected market analyst and managing partner at Fundstrat Global Advisors, recently raised alarms about dwindling supply in OTC markets. He stated that the available institutional supply of Bitcoin is at record lows, meaning that the largest buyers, those with the biggest wallets, simply can't find enough Bitcoin to meet their needs. Lee also predicted that Bitcoin would cross the $1,000 mark well before the end of the year, driven largely by this imbalance between supply and demand. However, he cautioned that some institutions might be intentionally suppressing the price, fearing the chaos that a sudden upward spike could trigger. Adding another layer to the story, Bo Hines, a former congressional candidate and vocal Trump supporter, has made some eye-opening claims. According to Hines, an executive order has already been signed under Trump's leadership that not only outlines the formation of a sovereign wealth fund, but specifically mandates the creation of a Bitcoin reserve under the US Treasury. If true, this would represent the first time a global superpower has taken direct steps to accumulate and protect a strategic reserve of cryptocurrency. Hines even went further, suggesting that the internal accounting for these Bitcoin holdings has already begun, a quiet yet monumental shift in US financial strategy. This leads to a question that has crypto analysts, policymakers, and investors buzzing. Is the US government quietly hoarding Bitcoin under Trump's direction, laying the groundwork for a future financial realignment where digital assets replace traditional reserves? It's not an entirely new idea. Countries like El Salvador have already moved in this direction. But if a global powerhouse like the United States were to take that leap, it could trigger a domino effect across other major economies. As Bitcoin's supply dries up and the price continues to climb, the stage may be set for another bull run. But this time, the stakes are much higher. It's not just retail investors trying to make a quick profit. Now it's about political strategy, national security, and global influence. Trump's policies of aggressive deregulation, his personal financial interests, and his alignment with wealthy crypto backers all blend together to create a picture of a leader who isn't just adopting a new technology, he's wielding it. So, are we witnessing the rise of a more decentralized financial future, or simply the dawn of a new elite class, where digital assets are held tightly by the few at the top? As Trump blurs the lines between politics and profit, the world must ask, who really controls the next financial era?